With the victory of a pro-bailout party in Greece, another crisis has been averted in Europe. I'm Winnie O'Kelly, reporting for Business Day Live. Later in the show, we've got an interview with the head of pharmaceutical company Bayer. But first, market relief at election results in Greece has already begun to fade. I'm joined now by Nathaniel Popper from the Business Desk. Welcome.
Good morning.
So we had a little bit of a rally here, a great wave of relief that the party that was sort of anti-government and anti-bailout in Greece did not win. So how are the markets behaving this morning?
It's been a pretty fascinating, 12 hours since the election results came in. I mean, you saw an immediate response as the first exit polls came in with people buying up the euro, expressing some confidence in the euro, expressing confidence in the idea that Greece might stay in the euro, that the euro currency could hold together. And Asian stock markets, when they opened last night in U.S. time, they shot up. But already by this morning, by the time U.S. stock markets opened just recently, already the optimism was gone, and people were bidding down stocks and getting worried about really the next crisis, which is Spain.
So tell me, what's happening in Spain for its borrowing costs?
Well, Spain this morning broke sort of this really psychologically important line of the 7% yield on its bonds. People were selling its bonds, demanding a greater yield on their bonds, and there's this idea that once the yield on Spanish bonds or Italian bonds goes above 7%, that it just becomes unsustainable for them to borrow, and that's where Spain is right now. And the European Union had extended this bailout to the Spanish government to help its banks, but that clearly wasn't enough, and there's clearly a sense that something else is going to happen if Spain is going to be able to keep borrowing in the bond markets.
So as we've seen time and again throughout the European debt crisis, some intermediate steps are taken. There's a wave of relief, which we've seen just now, but something does feel a little bit different ahead of the summit coming up later this week when the European heads come together. There's a realization now, I think, that it takes more than some sort of a temporary or a fund to really solve this problem. What can we expect from this meeting?
Absolutely. I mean, yeah, I think that basically every solution up till now has had a real incremental feel to it. It was dealing with one specific problem. What you hear in advance of this summit on Friday, which is the leaders of the four largest European economies, is a sense that, okay, if the euro is going to survive, if this European experiment is going to live on, we are going to have to do something much larger. We're going to have to bring together, we're going to have to create more real financial integration between the European economies and more real supervision of the European banking sector, which right now is still done very much on a piecemeal, national basis, each country on its own. And I think that you haven't necessarily seen that awareness before, but it certainly leads everybody to be watching this gathering on Friday, which will then lead to, I think, a week later, the meeting of the European Council, the entire EU coming together, and I think that's where everybody's really going to say, did they get it? Are they realizing that something big needs to happen? That the time for sort of incremental solutions might be over.
And in a sense, the head of the European Central Bank, Mario Draghi, has really set expectations fairly high with his recent comments, correct?
Absolutely, yeah. I mean, I think central bankers are again being looked to as a solution to this, and Draghi has sort of put himself out there talking about the need for that sort of integration and his desire to put out a sort of roadmap for that. But again, it's going to have to be more than just central bankers this time. It's going to have to be political leaders as well signing on.
And one other thing that's coming up this week, the Fed meets. Obviously, they're watching what's happening in Europe very closely. Policymakers are concerned about the slowdown. Do you think this will have any impact on whatever decisions they might make?
Well, I think that probably the central issues they're looking at is U.S. economic data. And U.S. economic data has clearly been coming in slower than expected, suggesting that the economic recovery in the United States has been slowing down. And I think that that's probably what's weighing most on the Fed. And there have been, little indications here and there that the Fed might be ready to step up and take another step to stimulate the economy. I think the knowledge that Europe is still not solved, the knowledge that Europe still, is on the precipice, could give a bit more weight to people saying we need to take some steps to insulate the U.S. economy.
It'll be interesting. And then finally, just to remember here that Greece is not out of the woods, right? The party that's elected is going to try to form a coalition government, but the austerity is so painful, they're going to be looking for changes in the terms of their bailout as well, correct?
Sure. Yeah. After the vote yesterday, I mean, as soon as it came in, as soon as it became clear that this pro-bailout party likely would be able to form a government, there was already a sense from investors and traders and strategists that I was talking to that this party has an incredibly hard road ahead of it. There are a lot of steps that need to be taken before Greece again becomes a viable economy, which it isn't right now. And you heard people talking about them sort of taking a step away from the abyss, but they're still just a few steps away from that abyss. So a lot more needs to be done, even in Greece.
Thanks for being with us today, Nathaniel.
Absolutely.
The scope and duration of the crisis in Europe has continued to grind away at European businesses. Earlier, reporter Louise Story spoke to the chief executive of the drug maker Bayer about the crisis.
So how much harm has come to Germany and European companies in Germany from this crisis going on?
Relatively little in Germany so far. In Germany, the employment is very high. The German economy has been, growing. Exports have continued to do well.
So if you weren't reading the news and you were in Germany, you wouldn't really even feel what's going on in Italy and Greece.
That's right. Germany is the export champion in Europe, and the fact that as a result of the euro, countries that weren't doing as well couldn't adjust their currency, revalue their currency, has had an effect on their competitiveness. So I've seen some studies where the growth in Germany over the last decade has probably benefited by 1% to 2% a year as a result of the Eurozone.
So a big thing going on here in the U.S., of course, is healthcare reform. And I'm just curious, how some of the coming changes in the law from Obama's healthcare reform will affect your company.
We really welcome the idea that healthcare and healthcare insurance is accessible to the entire American population. So this is in the end good for society and of course also good for the pharmaceutical industry. Pharmaceutical development costs an enormous amount of money. New drugs and innovation are extremely expensive and are high risk. So what's important for us is that we can continue to have this business model of innovation and spending sometimes $2 billion and 12 years on developing a new breakthrough drug, that you get rewarded for that at the end with decent prices to be able to make a return on your investment.
And now Bayer has cut its sales force, right? And a lot of companies have. So how is your marketing of drugs changing?
Well, we haven't really cut our sales force on the oncology and cardiovascular side. Say if you have an expiration of a patent, a product suddenly becomes exposed to generic competition. That is a time where you sometimes have to adjust sales forces, and we've done that 1.5 years ago in one particular area.
That's all for today. Please stay with us online at nytimes.com for continuing coverage of this and other stories. I'm Winnie O'Kelly, reporting for Business Day Live. Thanks for watching.